Sorry about that. All right, let's move on to our next session. We're almost done. We have a few more sessions to go and some really exciting ones coming up. So the next one will be our executive roundtable on the future of fintech and financial services. So I know we're running a little bit behind schedule, so I will introduce everybody very quickly. We have David Galvan from Mastercard. Boo, just kidding. We love Mastercard. We also have Andrew Vincent from United Income. Yay. We have Naresh Vyas. By the way, I'm really sorry if I mispronounce people's names. I really hate it when people mispronounce my name. People call me Mariah all the time, and it drives me crazy. So I will preface by saying I'm sorry. So we have Naresh from the Royal Bank of Scotland and Eric Connors from Ellie May. And the session will be moderated by Stephen Ramirez from Beyond the Arc. So let's welcome our guests.
At this conference, one of the things that I love about this group is, as Patty said earlier today, this is really where a lot of the forward edge of fintech is discussed and debated and explored, and that is certainly my intention in our panel discussion today. This roundtable is not about rehashing the fintech that you've been living or seeing on Twitter or that's been bandied about. With this group, we're going to, I think, break some new ground. We're going to talk about, from their vantage point, what are we really seeing that's exciting in fintech? What's the next stage? And how is that going to change financial services? So folks, why don't we just start with just a kind of a brief introduction, if you want to just give a couple-line background of your vantage point on fintech.
Sure. So I'll get started. My name's Andrew Vincent. It's nice to see you guys here. You guys look very awake and enthusiastic right now. Yes. We like that. So I was one of the founding members of a company called United Income. We got started 3 years ago, raised a seed round of funding, as you do, built and launched a product, as you sometimes do, raised a Series A, grew to $750 million of assets under management, and then sold recently to Capital One. So we've gone through the whole life cycle, and I'm here to talk to you guys about that future of fintech.
Sure. Hi, everyone. I'm Vyas Rao. I'm not Eric, although so he's unavailable today. But
and we're much more happy to have you. So glad that you're
here. I'm the younger, better-looking version of Eric. What I do at Ellie May is I am responsible for our product strategy for our flagship product. And what Ellie May is in the business of doing is helping lenders help you buy homes. So if you've bought a home or refinanced in the last few years, 50% chance it went through one of our customers. And most of you probably didn't enjoy that experience of buying that home. So fundamentally, on a daily basis, what we personally are doing is trying to improve the home buying experience for everyone. And we also have a huge ecosystem of partners, startups and other institutions that are trying to reimagine home buying. And we are a platform that really brings everybody together. So, really excited about the impact we are able to have on every single American home buyer. So, that's excited to have you all sit in on our session today.
Hi, I'm Naresh again with the Royal Bank of Scotland. So it's a very, maybe I could provide a bit of a different perspective, mainly focused on the UK. You heard, those of you who are here this morning, you heard a lot of talk around things like open banking, things like faster payments. There's all sorts of innovations that's happening in the UK market, and banks like Monzo and Starling Bank that sort of cropped up, and highly progressive regulator, very disruptive fintech ecosystem, arguably part of the capital of fintech to some degree, and tons of interesting opportunities. And how does large banks like us, we've been around. For those of you who are not familiar with RBS, we've been around for about 300 years. So we're one of the oldest institutions out here, and very different than the 2 years.
Yeah, no, you're making me feel my age here. Thank you.
And how do we compete in terms of we don't have the opportunity, or a fintech would be very niche and very focused, and we need to be a universal bank. So we can't say that we'll only bank the high potential, high income folks. We have to bank everyone. And how do we compete in that space?
Hi, I'm Dave Galvan. I'm with Mastercard. I manage our sort of fintech engagement practice in San Francisco. I've been with the company 4 years. I'm not a traditional payments guy, but I spent most of my career in consumer internet. So I worked at Netscape and Yahoo and ran a couple of tech companies. I was really hired because I knew how to work with tech, and then I sort of learned payments along the way. I spend most of my days engaging with mid-tier, early stage, some later stage fintechs. I talk to about 325, 350 fintechs a year. So I'm pretty engaged with these companies, a lot of one-on-one time. Mostly what I do is help them get products and services to market. I understand sort of how Mastercard works, where all the bodies are buried, who are the right people to talk to. My job is to connect startups and other folks with the right people at Mastercard they need to talk to, and then sort of manage the whole process along the way. So I have a pretty good sort of window into what's going on with fintech. For me, fintech's very broad. It's not one particular thing like neobanks. Fintech's not a vertical. Fintech's a horizontal. It's like small business, right? And so there's probably 20 different types of verticals in fintech that are interesting, like neobanks, wealth management, alternative lenders, you name it, and I'm sort of involved in all of it.
All right, well, I want to key off something that Naresh just mentioned in passing, which is open banking, right? So in the UK, it's probably been the story of the year. Dave, I want to maybe sort of put you on the spot. Why isn't it that we have open banking here? We've got the technology. Why isn't it a reality?
Because we have a lot of regulators. So open banking is really good in Europe just because of the deregulation. It's allowed companies like Revolut and 26 to essentially become banks and go to market. We're not a bank, and we're not a regulatory agency, so we don't control that. For us, if open banking, that concept of open banking, which is basically just allowing people to participate more in banking-like activity, happens, we're totally fine with it. And one of the areas, well, you're already starting to see open banking kind of happen in the U.S. Plaid is a perfect example of a fintech that really allows other fintechs to become more open-like, right? They connect to 11,000 banks and allows you to take that financial data and push it to a variety of fintechs. Real-time payments is another area, which is just fast ACH, which is another area which is sort of embraces open banking. Both of those are fine with us. So however the world evolves, we will participate.
So Andrew, what about you? Any take on open banking? Has that been a part of your game plan?
So open banking isn't really where we're focused. We're on investment management, but it's tricky with open banking because open banking generally is focused on these more technology-forward users, let's say. People who are interested in a non-banking branch kind of bank who are more comfortable with an app or a website. And really, that's interesting based on the demographics that we're looking at here. So 84% of the investable assets in the United States, they're not held by millennials. They're held by people over the age of 50. So when you start looking at that demographic, you're serving the wrong customer if you think neobanking and open banking is really going to move the needle. Where is the money, and are you serving those customers instead?
Naresh, so now as you sort of take that global view, it's working in the UK. We're not seeing it here. Maybe it's the demographics. Maybe it's regulatory. Do you have a take on that?
It's clearly a combination. I mean, the UK is a smaller environment, right? And you have 9 major banks. The regulators said, well, all 9 banks must comply with a particular set of APIs and make them available, right? Yeah, so it's like I mean, it's less banks in the UK than you have in any particular state here. So it's a much simpler ecosystem. But that being said, I think what people have all focused on is third-party enablement with open banking. But the reality is, it actually helped us quite a bit. It actually API enabled us, so we could put to market very quickly innovative capabilities that otherwise would have taken years. So I'm quite excited about the first-party apps and the second-party apps, where we could partner with someone and say, hey, let's work on this together, and we can build out a capability that otherwise would never make our radar. We ran things like hackathons with these open banking APIs in there, and then amazing ideas come out. I mean, very simple things like there's one team that created a Polish version of a banking app, right, and for the Polish immigrants in the UK. That would never have made our top 1,000 things to work on, right? That would have sat in the backlog forever. But now you have someone who's doing that. We would be happy to bank this community, and now you can let that out, and we can we're creating a bit of like an app store on our in our mobile app and on our site, where here's our trusted third-party apps that you could for our customers to use.
One thing I wanted to piggyback on something he said is, your bank being able to use the data to better serve your customers. I'm sure everyone here has a bank account, but when you wanted a mortgage, for example, you probably went on LendingTree and just gave them your information, because the experience you generally would have if you went to Bank of America or Wells Fargo and you wanted a mortgage is they would literally ask you for every single piece of information they already have about you. Which is such a shame, because they can give you a really personalized experience. So just, that's really where, we're, banks and, institutions which are sitting on lots of data, but legacy platforms are shooting themselves in the foot because they're not able to use their own data effectively to just provide a better experience. So I think, one is enabling other, the plaids or, similar technologies of the world, but then, just institutions getting smarter about using the data that they have to better serve their customers.
I mean, in fact, just on that point, one thing we've done is we launched a small business lending capability where, a customer can borrow up to 150,000 pounds instantly. And what we've done is we don't ask for all the information. And you don't even need to be a customer of our bank. Because of open banking, you could be a customer of any of the banks. So you could be a Barclays customer. You could come in. You could for your application is basically giving us consent to access your data from Barclays. We'll use the open banking APIs. We'll get all the data we need to, 6 months of history, everything else we need to do. So literally the first loan we gave out, I think it took the person 6-7 minutes. It was a Lloyd's customer to fill out the application, and because of faster payments, in another, I think 7-8 minutes, he had 100,000 pounds in his account, in his Lloyd's account. So it was just such a 15 minutes end-to-end lending. I mean, even Lending Club or Prosper here, still takes 2-3 days before they could fund a loan, even with instant decisioning.
So if it's not about APIs, I mean, do you guys see is it personalization? Is that the silver bullet for fintech?
At least from the vantage point of mortgage within the United States, we really believe personalization of and the consumer experience is really where it's at. Gone are the days where people have the patience to pull out, pay stubs, W-2s, et cetera, and send it to, whatever lender, is willing to lend you money. But anyone who is able to better use data and personalize the consumer experience and use that data to make better decisions, because let's say Bank of America has all of my data. They know the frequency with which I get paid, how much I get paid. They should be able to use patterns to not have to ask me to produce my pay stubs, and to then make it a very seamless lending experience. So I think that's the trend, and the more we see this, I think the people who differentiate themselves will be in that space.
All right, so I remember my first conversation on personalization was probably 1995. So what's changed, and what makes it the leading edge today?
Well, I'm not sure that it is, not to cause strife, but that's why you have a roundtable discussion, right? So one of the things that David was talking about earlier when we were catching up was this idea that a lot of the first fintech companies that we've seen have been very narrowly focused. They're going to do one thing and they're going to do it really well. But as you focus on that one thing, you realize you just don't have the breadth to do all of this additional stuff. You don't have the ability to make those smart connections. Since we don't have the open data infrastructure, you can't do that. So what we're starting to see is a lot more strategics getting involved in these fintech companies and finding ways that they can take these small fintech ideas and bring them into that larger ecosystem. And David, you were saying that you call that fintech 2.0.
Yeah, and I don't think personalization's not driving it. It's just banks are big and slow, and they didn't need to innovate, right? And the reason they're doing that is because it's not because they don't need to. They shouldn't, right? Everybody thinks banks are dumb. They're not dumb. They're really smart, right? The top 20 banks in the U.S. all have innovation teams. They all have offices in San Francisco. They all have venture guys. They know exactly what's going on, but they have 200 million customers, right? And so it's not like some shiny marble comes rolling across the room because some 24-year-old kid created it and they're gonna deploy it. They don't need to, right? So they're sitting back and they're waiting to see what is going to resonate with their customers, and then they're going to wait for the dust to settle, and then they will roll these things out to their customers in a very, very methodical way. Look at what the big banks did with peer-to-peer, money, right? They sat around and waited for Venmo to prove it out, and then they rolled out Zeal, which was their version, and it's been massively successful. Right? I do think the areas that are a little bit at risk are long-tail banks in the U.S. There's 11,000 banks in the U.S. There's a whole bunch of guys sitting in the middle of Ohio that have 10 branch offices. The average age of their worker is 65. The average age of their customer is 65. They just don't. They're not going to be around for when this innovation starts to happen. So I think there's a little bit of risk there. The big banks are going to come in and take their customers, and then some of the neobanks that survive are going to come in and take their customers as well.
Well, one thing it does seem like the big banks are jumping on is AI and using data for decisions. Is that do we see that really? And actually, are you seeing that also kind of on a global scale too?
No, absolutely. I mean, you should look at. I mean, banking is primarily risk management. I mean, in terms of what's your business day to day, and the more data you have, and the new techniques around AI models, machine learning models, are just helping curtail risk. I mean, I mentioned that small business lending portal where we instantly can make a decision. It's all because we have machine learning models there. Not only do we get consent from customers to access their data for the loan application, we have consent for the entire period of the loan. So if you have a 2-year loan, we are accessing your data at the other bank for 2 years. We can see if there are any changes or trends that change. So it looks like your affordability has changed now. Perhaps you should restructure your debt before you end up in a default situation. Or loan impairments are bad for us, it's bad for the customers. We could prevent those. It's a win-win for everyone. So I think AI data is key for all that stuff. But again, I mean, I fully agree with David. It's a more methodical. Where does it make sense in terms of all that's behind the scenes?
And data's always been around, right? It's not like banks all of a sudden oh, we got a lot of customers, we should analyze it, right? They've always analyzed the data. They have incredibly complex risk models. Their underwriting models are very complex, right? You don't need to be some AI genius to create this new neobank risk assessment model for underwriting, right? Because it's like the banks are just going to go, well, okay, great. Then you assume the risk. I'm going to use what I have, right? And so it's always been there. Again, banks are not stupid. They're really smart. It's just how and when they're for all intents and purposes late adopters of technology, which doesn't mean it's bad. They're just late adopters of technology because they can be, right? And so they will slowly start to roll these things out. They're going to pick and choose the nuggets they think are going to resonate with their customers, and then Cap One buying his company, right? And then they're going to roll these things out over time to their customers.
So Andrew, the role of data in your company. So how central is it, and what role did that play in your relationship with Cap One?
Yeah, so data has been a point of a lot of discussion, and I've got some engineers back in our office who get angry whenever people start to talk about big data, because when we got started, we don't have big data. Let's be clear, we're a small company. We have what they call annoying data because it's just a pain in the butt to mine. Big data is useful, and machine learning is useful, but it's only useful in places where you know the rules are going to be set. As soon as you've got a place where the rules are changing all the time, when you've got regulations that are changing, suddenly that model that you've spent years developing starts to fall apart, and you've got to retrain it, and that's an awkward period of time to kind of walk through. So what we're trying to do is figure out where are the places that we can use information now that we're part of a big financial institution to start to inform some of the models that we've built. But again, it's going to be selective use, because in reality, when people come to us to build a financial plan and to have their money managed, they're coming to us with a relatively unique situation and set of needs. We need to make sure that we don't overgeneralize while we're serving them.
So we talked about the importance of being able to act quickly, take data from a lot of different sources, be able to sort of personalize if possible. But there's sort of an assumption there that we know the customer, right? That there's then something about really making sure that there's that it's actually that person. So the whole point around digital identity and what that means. I wonder if you guys see digital identity as kind of central to your business. Is that something that you're actively devoting resources to?
Yes.
Okay, great.
So
Good discussion.
A couple things.
Tell us more.
I mean, look, I mean, part of the value that we provide is, in addition to safe and secure transactions, is really good management of data, right? The system is really, really good at that. I have tons of folks that come to me and they want to issue crypto-backed credit cards and all these crazy, I want to, lend money to folks in Singapore and the Middle East. And it's like, what's your KYC AML? And they're like, yeah, we don't have that. And we're like, bye-bye, right? Libra is a perfect example of something that just flamed out because they just didn't take the management of data, especially around knowing your customer and anti-money laundering, seriously. They're like, oh, trust us, we'll take care of it. And all the networks punted on them, everybody else punted on them because they didn't have a good solution for that, right? And so it's fundamental to the management of data. We're looking at unique ways of managing data, things like blockchain and other mechanisms for managing data safely and securely. Yeah, we're down with that, but it's core to everything we do. When we work with fintechs, if they don't have answers to these types of questions and they can't manage their customer data, we will not let them take our products to market.
Naresh, are you seeing anything interesting in this area?
I mean, I think the trend you're seeing is governments and sovereign institutions issuing digital IDs as well, right? There's a project going on in Canada right now, which is a bit interesting. Where from what I've seen is that if let's say you want to log into the IRS in Canada, you would end up redirecting to a bank site, whichever bank you work at. You authenticate there, and then you go back to the IRS site. So they're kind of outsourcing some of the KYC. The government is to the banks, because the banks do it anyways. You've seen other models where the government is issuing IDs, right, to each individuals. But digital ID is inevitable. It's going to be there, and it will simplify things quite a bit. Really good cases, India, where they've done the Aadhaar card, and the government's taking over responsibility of the KYC. So as a financial institution, all you do is you capture biometric and you call an API, and you'll get the name, date of birth, address, all this stuff from the government database, and they vouch for it. So it took the burden off the financial institutions.
So biometrics, is that the next big thing?
It's difficult.
Yeah, it's difficult. We need something. I mean, as I'm sure you know, it is one of the most heavily funded spaces right now in the Valley. This identity problem, and we need something like that. And when we don't have it, obviously, social login doesn't work in really in this space. So we need a clear way for someone to identify themselves so that they don't have to produce that data over and over again. They don't have to manage multiple accounts with every institution they have a relationship with. So I think this is going to be a trend that will be shaping the fintech space moving forward.
And I've seen some very interesting applications of biometrics, things that I didn't even know were biometrics that are part of that. Are you guys seeing particular technologies within biometrics that seem promising, that you think that there could be something there?
Well, I mean, one thing we do that's quite interesting is we already have deployed is what we call behavioral biometrics. So it sits behind the scenes, but we sort of capture around 500 different points of how a user interacts with us. So, do you use the numeric keypad or do you use the numbers at the top? What angle do you hold your device? How quickly do you type? All sorts of these things. We don't necessarily use that to identify an individual, but it's quite key for us to capture or prevent fraud. So if someone's typing faster than a human could possibly type, or someone has changed the account, the payments going using Shift Tab right on the last screen. Less than 2% of the population even knows what Shift Tab does, let alone use it on the payment screen right before you hit submit. So normally it's a Trojan. So we've seen all sorts of fraud that we've been able to stop. And it was quite, I think, important, and I think it's be very important in the U.S. market. As soon as you get faster payments and then money's moving real time, then it's just gone out the door. It's nearly impossible to recover the funds. As long as you have a couple of day delay, you actually have time to recover. So I think improving that and just getting the bar high is going to be important.
So and it's a little more complex because we envision a world where you used to, this plastic card that you have that you swipe and it's pretty easy to identify, that we don't think that's the way the world needs to go, right? So we envision a world where there is no more plastic. You have payment credentials spread out everywhere. And we're fully supportive of that. If you're going to have payment credentials embedded, I'm working with a company, they're actually embedded payment credentials in a coffee mug. Right? And so, I guess the idea is you get a cup of coffee and you pay for it, or I don't know. It's Australian. If you're going, if you're going to embed payment credentials across all kinds of things, I've seen it in shoes, I've seen it in watches, I've seen it in rings. You have to be able to authenticate those credentials, right? And so you're going to need all kinds of different and unique ways of validating consumers. And so we're looking at all kinds of crazy stuff. We own a company called New Data that does kind of it's more, it looks at like how you do account setup and the way you type and the pressure you put on, like 500 different things to your point. Looking at different body parts and all kinds of other ways of identifying authentication. So the more unique ways of paying for things, the more you're going to need to validate those credentials and the people using those credentials in the marketplace.
Excellent. I'm astounded, but the time is just flying by. So before we completely run out of time, what I'd like to do is I'd like to get a sense from each of you, just maybe a sort of a moderately quick answer. What's the one thing in fintech that you personally are genuinely excited about? Andrew, you want to start?
Thanks. I appreciate you giving that to me first. That's really kind. I'm going to stall for time here. I'm excited to see what comes next. So we've had a lot of folks come out and solve the simple problems. How do I save more? How do I invest this money? How do I make transferring payments easier? But those are all table stakes now. That's the baseline. Now the real question is, what are the interesting things that you can do with that? How can you weave all of these together? And can you combine them with legacy companies that know, like David said, what they're doing and really create something that is new and innovative that's going to be accessible to everyone, unlike, say, Bitcoin or blockchain, which really, though interesting, hasn't caught on because the normal person isn't going to go out and buy their groceries with Bitcoin for many reasons.
So for me, I think the most interesting thing that I'm looking forward to is just increasing the credit availability. Today, the average person who gets a paycheck works 40 hours a week. It's easy for them to buy a home. But for someone who's in the gig economy or things like that, it is extremely difficult to buy a home today within the United States. So I want to see a trend of data being used to underwrite loans for people who can still pay back, but they don't qualify in the normal sense. So I'm really excited about that trend. So.
Yeah, I think there's a massive opportunity to help the unbanked. I mean, even in the UK, we have about 10 million unbanked people, and I mean, you can add Azure to that, I think, in many other parts of the world. And I think what you see in fintechs and the ability to sort of address these niches, if a low-cost way of helping people who are unbanked into the system and being able to, help address, money, lending, credit, all sorts of stuff. There's tons of opportunity in the unbanked space.
So last year in the U.S., there was $80 billion invested in fintechs that represented about 1,700 new companies. There's currently 6,000 fintechs in the U.S. That's a lot of fintechs. I can tell you that 2020 is going to be really interesting for a number of reasons. You're going to see a lot of consolidation as fintechs start to run out of money. Their customer acquisition costs are through the roof. They need to differentiate. They need to find revenue streams. They need to become more bank-like. So you're going to see a lot of consolidation. Guys just flutter away to money heaven. Banks come in and swoop guys up. Lots of verticalization, which I think is really good. Banks are paying attention. The one thing that fintechs provide is a lot of transparency into fees and value for consumers in terms of saving money, supporting the underbanked, specific verticals like immigrants coming into the U.S. that make a lot of money that nobody will give them credit cards. So banks are starting to wake up and see the opportunity. It's just going to be kind of fun year next year.
Excellent. Well, on that note, I want to please join me in thanking the panel here. I don't know if we have time for a minute or two for questions and answers from the audience, and it's hard for me to see. Anybody have questions for this for the group?
Innovation stage, and then the other for the younger group, which might take longer to develop. Why can't we have 2 phases? So you can catch all the assets of the elders or over 50s, and then catch the assets of the youngers in different ways.
So one of the questions I would ask back is, why is it different? So one of the examples that people like to say is, hey, Instagram serves the millennial market. Instagram doesn't serve the millennial market. Instagram makes it really interesting to share pictures in a way that's exciting. Doesn't matter if you're 70, doesn't matter if you're 30. It's about sharing pictures. They've made that experience perfect. Why does it have to be different for a 60-year-old and a 20-year-old? It's the same problems. It's, I need to save up. I need to pay down my debt. I need to make sure that I retire well. And I need to make sure that I don't run out of money. Everyone's got those same worries.
And I like the way you say that, too, by the way.
At the end of the day, it's just people that have money that can use technology. And if it's a 50-year-old person or a 60-year-old person, then so be it. So a lot of it is just marketing hype. But at the end of the day, it's the users with money and see value. They're going to come and use these products. I was telling these guys, I taught a class at the University of Michigan 2 weeks ago. 45 attorneys, all under 25. I asked them who used the neobank. Not a single person in that audience used a neobank, right? So it's not just a millennial thing. It's customer free and get them.
Great. And one final question. Any last questions? Yeah.
Oh, hi. This is a question for Naresh. Can you share how you're thinking that Royal Bank of Scotland is making it easier or more conducive to engage with the ecosystem, whether that's fintech or otherwise?
Absolutely. I mean, we're probably one of the largest, I would say, incubators in the UK. We have like a dozen locations. We probably help incubate about 3,000 startups. Since we started the program, maybe around 4 years ago. Everything from providing space, accessibility. We actually run a whole accelerator in central London. So we're very engaged in the community. I mentioned the hackathons and stuff like that. We mentioned open banking. We have hundreds of developers that have signed up on our open banking portal to get access to our APIs and be able to build in our sandbox. yeah, so being quite progressive, I think, working closely with the fintech. We don't view as an adversary. We sort of say, what can we learn from the fintechs, and ultimately it's going to be the connections, I think, that's going to help, and there will be consolidation in the space as well. So I mean, it's too many.
Excellent. Well, I think we better call it there. I think they're literally going to throw us off the stage. So again, thank you very much. Yeah, that's actually what I was expecting.